Hey everybody, before you listen to the show, two quick things. I hope you and your loved ones are safe, happy, and healthy. Secondly, stop right now. If you haven't already, check out our free to access conveyancing service for mortgage brokers and estate agents. Mortgage brokers must check out our free to access services at themortgagebrokerclub.co.uk, including over 25 categories of mortgage broker tools. Stay well, and I hope you enjoy the show. Welcome to the MLC Show for property professionals. I am your host, Sean Rogers, and I'm delighted to be joined on today's show by Samantha Emery of Glenhawk. Glenhawk provides short-term property finance with a strong capital base to lend, whether you're looking to acquire a new property, unlock equity in a current property, or you're initiating a property investment or refurbishment. Glenhawk specialise in second charge, commercial, refurbishment and residential lending, and they work with intermediaries nationwide. So on today's show, we're going to be asking for Samantha's views on the sector as a whole, whether there's any recent spikes in specific areas, and we're going to learn more about what type of cases are converting successfully and which cases are difficult to find solutions for. Samantha, how are you? How are things?
I'm very well, thank you. Delighted to be here. So thank you for having me.
Brill. And can you tell us a bit about your time before joining Glenhawk? We'll get right in here. Particularly, I believe, your time at Barclays and Together Loans. Did you enjoy it there? And tell us a bit about working in those operations.
Yeah, definitely. So I actually joined Barclays straight from school. So I was very lucky to go into my first full-time position in a bank, and went obviously straight in at entry level as a cashier. And I worked my way through over 11 years of being there, many different roles. The last 3 years I was there, I was in a Premier Manager. So basically what that meant is I looked after a portfolio of about 750 high net worth clients. And I did everything from savings to mortgages, loans, investments, everything along those lines. I absolutely loved my time there. I wouldn't change anything about it. It did a lot for me. But I think towards the end, as everybody, I suppose, who's been in banking a long time, a lot had changed from when I joined to when I left. And I actually was approached just via a social media network where there was a role that had come up, and I actually thought it was going to be too good to be true, to be honest. So they approached me and said, we've got this role, so you get to do all the bits you love from your job, which is being out and about with my clients and lending. So mortgages was the bit that I absolutely loved from my days in Barclays. But obviously, sometimes that can be slightly more difficult in the mainstream bank lending world to achieve. So I obviously went along, and I ended up found myself working for Together. So it was definitely a learning curve. I think my first week, my mind was blown because all I'd ever known was banking, and they were talking about unregulated mortgages and bridging finance and short term, and I learned so much being there, and I absolutely loved it. And although I loved obviously the days in banking, I don't think now, being in this specialist lending sector, that I could ever kind of go back to it. I love the speed, the flexibility, like the tangible evidence of what's going to happen at the end. It just happened so quickly. And yeah, as I say, I kind of got to do all of my favourite bits. So when I was at Together, I worked in the professional sector. So which meant that predominantly I looked after like accountants, solicitors, IFAs, ex-bankers. So it was a lot of kind of previous connections of people that I already knew, but I just got to expand that a lot further. And I did everything from bridging to, 30-year buy-to-let mortgages. So that was pretty much me before I ended up here.
It sounds like you had a great time Together. It must have been some pitch by Glenhawk to pull you away from there. What was it about Glenhawk that motivated you to make that change?
Do you know, I'd always heard of Glenhawk, and as soon as they started, they were on my radar. Obviously, being in that sector, you kind of got your eye on the market anyway, and I'd come across them, and I really, really liked their values and their culture. So I had known them for a while anyway, and I wasn't thinking, of jumping ship or anything like that. But they'd always been a lender that I kind of looked up to. And then this opportunity came. And I suppose for me, it was more of where Glenhawk are at. So Together, obviously amazing at what they do. They've been around 42 years, huge organisation, and I loved it there. But this kind of being at Glenhawk meant that I got to come in at the beginning. So we've been around for 3 years, and we're about to go on this huge growth trajectory, and I'm going to get to be part of that. So it was that really, and meeting Guy and Nick and the way that they are, and the thing, and I suppose, like I say, the culture, they literally do put the clients at the center of everything. I think it was just a mixture of all of that just completely won me over.
And how's it been in the last 12 months? Obviously with the pandemic, such unique circumstances across the world, but also in the sector as well.
Yeah, it's been crazy. I'm sure it has for everybody. As you can see now, I'm in my dressing room working from home. So it's a very different world for a lot of people. And I think, again, at Glenhawk, we were really lucky that we've obviously partnered with JP Morgan. So they've seen kind of the credibility, and they've given us a funding line of 200 million, which came in literally just before the pandemic. And they've supported us, the whole way through. And we've been in a really, I suppose, positive position where we haven't had to stop lending. So we have continued to lend throughout the pandemic. We obviously have done, like everybody else has done, and possibly looked at some scenarios where we may have to be a little bit more cautious, but every single one of our deals is looked at on a case by case basis anyway. So that wasn't really a huge change for us. The biggest thing was the remote working, I suppose, so getting everybody to work from home. And we're so used to being right next to each other and have, decision makers literally sitting across from you so you can ask those questions. So it was getting used to that. But I think we adapted really well, and the team have been amazing. And we've just been really fortunate that we've Glenhawk have been really supportive of being able to give all of the platforms for everybody to communicate, and really making sure that we all stay in touch with each other. And now, obviously, hopefully, as we come out of this, everybody's just as excited to be back in the office, which is a really lovely feeling as well. And I think it kind of just gives testament to the culture and the family that is working at Glenhawk. So,
is there anything that Glenhawk have said to you openly, or alternatively, is there anything that you would like Glenhawk to continue with that they have adopted during the pandemic period or the last 12 months that might not have happened otherwise? Like you were saying, working remotely there, it sounds like the organization have done really well with the engagement of the team and keeping the culture of the business, with you all still being able to communicate with each other. Do you think there's anything that can be taken from that and implemented back into the office environment, or is it not necessary to a certain extent? Is it more that chalk and cheese situation?
No, I think it's a bit of both, to be honest. They have really been supportive throughout of this, and that will continue. Everybody is fully aware that, with Glenhawk, we've always had flexible working, but now that's made easier with everybody being able to have the setup at home. And so that is definitely going to stay, very much a part of, and it is what people feel comfortable with. So nobody's kind of going to be pushed to come back in, and it's very much going to be a choice. But I think there will be a lot more of them that, I suppose, of the team that are flexible working, so possibly doing 1 or 2 days from home, and it showed that we can do it, and it does work really well. So there's no need, you must be chained to your desk in London. That's not going to happen. I suppose it probably has helped us in a sense as well. We've just taken on a new office, which is absolutely beautiful. So I think everybody's really keen to get back in anyway, but there will definitely be that element of flexible working. And we've obviously got some processes now that have been put in place that will probably make things quicker and a bit more efficient. You don't need to be sitting next to somebody now because we've got different processes that are in place. So it doesn't matter if somebody's, not right next to you. And that will definitely continue.
I was reading that the former Precise Mortgages executive, James Pritchard, I think he was the best head of sales at the 2020 Specialist Lending Awards. He's joined Glenhawk recently. Yeah. It seems really exciting times there. Where do you see the main area of growth? Do you see any particular form of specialist lending being the key one that you could see large growth in this year? Everybody's delighted that Jamie decided to join us. And I think that it's kind of testament to where Glenhawk are at and where they're going, because we already had, really good foundations with our product set and Guy, obviously, and his vision. And
and the team that are already there and the type of people that he's taken on. But one thing that we hadn't really invested in was like the sales plan and the structure going forward. So for that kind of scalability, distribution, and the new product sets that we're going to have, and that is everything that Jamie has got experience in already, which he's obviously going to, help us with here. So I think there will be growth in many areas, and I definitely think that in the near future there will be a lot more products out from Glenhawk, and we'll be going into a different space. So where at the moment we're bridging finance, we will definitely be growing as a specialist lender and going into the other areas such as obviously buy-to-let, commercial term, possibly development, those kind of areas. And our aim is to not be a specialist lender, it's to be the specialist lender. So it's really exciting times, definitely big growth plans.
Have you seen any spikes in market activity over the past 3 to 6 months, whether positive or negative in the trends?
Yeah, I suppose there's been a few in different areas of things with stamp duty and stuff like that. But one of the things I suppose we've seen probably the biggest spike in would be development exits, or marketing loans, as obviously some call them. So where obviously with the pandemic, unfortunately, building has been a little bit slower, where they won't be able to be on site, or, there was a slight delay. It did pick up very quickly, but a delay in surveyors being able to go out. So, the housing market slowed down a little bit. But I think that did affect some development projects that were going on, and it's kind of affected them coming out. So we've seen a lot where builders have come to the end of their term with their development finance, but unfortunately, they either haven't finished, or they're finished, but they're on the market and haven't sold yet. So we're definitely seeing a massive spike in doing development exit bridges at the end of that. So just where they basically just while they sell, some even where we're lending a little bit, just to finish the works before they come out. But that's something that's seen massive growth, which, obviously it's great for us. I suppose it's a shame for some builders where they haven't been able to be, out where they'd like to have been, but at least they've got, other options. And at Glenhawk, we're really happy to support up to 75% loan to value on those, which I think is a lot higher than the rest of the market. So
I was reading about borrowers coming to the end of the bridging term and facing large renewal fees. Have you had many of these kind of requests coming in? Have you seen rebridging requests, if you like, looking to avoid these large renewal fees? Is that something Glenhawk do? Have you seen any of these yourself?
Yeah, definitely. Yeah, it is something that we do, and it is, again, probably for similar reasons, it is something that we come across quite often. I suppose it's always something that's been out in the market anyway for whichever reason. But yes, so on our actually, funnily enough, I've got an example recently of, we had somebody that come to us, and it was just a residential bridge, but unfortunately their current lender was about to charge a very large renewal fee. They had 12 days to come out of it. The property was on the market, it was going to sell, but it's not going to sell in 12 days. So that came to us here, and we were able to do 70% for them of the property value. And we actually completed in 11 days. So, we saved them a nice chunk of money there. But, unfortunately, it is something that we do come across, but it's definitely something we're more than happy to help with.
I bet that was an exciting last day for them when they had 12 days to complete and they're sat on day 11. It looks like Tom Cruise and Mission Impossible to me, that.
It was, yeah. And actually, the client's already come back to us again as well. So I suppose it's a testament to how well we did. But
rightly so. We've been reading a few stories about commercial borrowers having issues with the current lender in respect of the split between residential and commercial, and particularly when they're needing to find a fast solution. Have you got any experience of that? Is that a problem you're seeing?
Yeah, so a lot of lenders will look at this differently, actually. And some lenders will look at it between the split in and commercial to residential. Some will want to look at what the square footage is, the split between the two. Some will want to look at what the value split is between the two. And some lenders will, either adjust their LTVs based on that, or adjust the rate, or some just can't do it at all. And I think more probably with the long-term lenders, it's a bit more difficult. So we actually came across one recently where the long-term lender required the residential element to be 60% of that and 40% commercial. And that's quite common, I think, with some lenders in the market. But here at Glenhawk, the split is not relevant to us. We don't mind. We don't mind what the split is between the two, whether it's square footage or value. We're happy to do 70% across the whole lot. So in this scenario, unfortunately, it came out for the gentleman after valuation that the residential element was only 52%, meaning the current lender couldn't help, and he had 2 weeks to find another long-term lender because he had to complete. Obviously, that unfortunately they're not able to do that for him in 2 weeks. So he came to us to help, and we lent 70% of the whole value in the 2 week timescale, which has now allowed him a little bit more of a longer timescale just to go and find himself that long-term lender, which, I mean, we already know of others in the market who are able to do it. So yeah, he just needed that bit more time. But it is definitely something, if somebody's looking at semi-commercial property, to take in mind when you're looking at lenders of what that actual split is, and ask that lender how they look at it. Is it square footage? Is it value? And what are their restrictions?
Great advice. And I wanted to pick your brains on cash out refurbishments as well, especially where, say, there's been a recent purchase and after the works, the borrower wants to raise as much as possible against the new valuation, completely understandably.
Yeah.
For me, that would be fraught potentially with issues.
Yeah.
What are you seeing at the moment in those kind of cases?
Yeah, again, I would say this is something that when you're going into a project, you would probably need to consider how quickly you're going to need to come out of that and what you're going to need out of it. Because again, all lenders will have a cash out refinance kind of rule or clause or restriction. And for us ourselves, I mean, again, this is something that we've actually come across recently, where a gentleman had obviously bought a property. He'd spent a certain amount of money on it and he'd owned it for 4 months, and he now wanted to release 70% of the new valuation. Now, our cash out refinance clause, I suppose, as you would call it, is 90% of the purchase price plus 100% of the works. So literally, I mean, the gentleman's obviously only going to have left 10% in the deal, but he actually required more. He wanted more of that out, so all of his funds out plus a little bit more to move on to the next project. Now, absolutely fine, we're more than happy to do that, but it does have to be after 6 months. And so again, I suppose quite a few lenders will have this 6 month. So it is something that you need to consider when you're going into a project. How quickly do you need your cash out? Can you wait that 6 months? Or is, as far as Glenhawk sit, is 90% plus the cost of works enough for you to move on to the next one?
And when intermediaries refer business into you, what can they do, or what can they do with their clients to help increase the turnaround time on decisions and completion? What can they do to really accelerate that process and make sure it goes through as smoothly as possible?
So I suppose in terms of decisions on day one, it will just be get us as much information as possible. And one of the things, again, that's really important to Glenhawk is we like to look at the client's covenant. What have they got in the background, or what experience have they got? What is their net wealth? Reason being is because we don't have a set product set. We will price individually for each deal, and it will be dependent on the property, the location, the client, and, as I've said, covenant. So that's always really good if you've got kind of an A&L, so assets and liability statement, or you've got a project schedule to provide up front, and then we can get you a really quick decision. In terms of the process and moving towards completion, as we all know, solicitors are really, really key part to this. So it's making sure that, your solicitor has, one, dealt with bridging finance before, because obviously the speed element is really key. But to also make sure that you have got a relationship, either the introducer or the client themselves has got a relationship with that solicitor. If not, then obviously they can always talk to us about solicitors we have relationships with, just to make sure that communication and the speed element always stays there. One of the other things I suppose would be good is, if possible, is to really look at the deal. So where we're looking at things like development exits and things like that, is, have things been built in line with planning? Have they had sign off? And where we know all of that information kind of up front, we can mitigate and be as flexible as we can to make sure that that process is really smooth. Because sometimes if things come out at last minute, it can cause issues or delays. For example, like where we've had valuations come back and something's been built outside of planning, and then we need to wait for permission from the local authority. So it's all of those. I suppose it's just really understanding the deal, and we're more than happy. I'm more than happy to support with that, and spend a lot of time with my brokers and introducers. And I mean, they have fully experienced a lot of them more than me anyway. But it's always good to kind of have that support element and work together on it, and happy to talk to clients as well directly. So
yeah, shameless plug time. I'm afraid to say, but yeah, in terms of solicitors, we're absolutely flying with the legal services operation at the moment. We're about to make a big announcement soon on equity release in terms of a new service we've got there, but especially in terms of the commercial property and where it comes to bridging. We've got a lot of quite unique flexibility in that area with the conveyancing services that we've got. So sorry, shameless plug, but if you're looking for faster turnaround times and 5-star lawyers, make sure you check out the Mortgage Broker Club's conveyancing piece, so you can register for free for that, anyone listening. And we're really proud of the rave reviews we're getting for that, and we've got some big announcements to make on that later in the year. I wanted to touch, Samantha, on any intermediaries that haven't worked with you before. They might be listening to this or reading about it or hearing more about Glenhawk in the press. You know, going back 5 years, 10 years, they're obviously going to have relationships with other specialist lenders or have an automatic view in their mind of where they might place something. What can they expect from you in terms of the actual relationship between you and the intermediary? What can they envisage in terms of the actual customer service side of things, the relationship with you guys? And also, is there any risk of cross-selling or anything like that? How should they view that?
Yeah, so I mean, look, we've obviously been around for 3 years, so like you say, they will have all these historic relationships, and sometimes, I mean, we're all creatures of habit anyway, and we just, you know, sometimes we go along with just what we know. But Guy, who started Glenhawk, was a property developer himself, so you know, he's very experienced. He's used many other lenders in the market previously, and that was where Glenhawk kind of came from, because he felt there was a gap in the market of somebody who really did put the customer at the heart of everything. And you know, sometimes there can be these misconstrued opinions of brokers just go for the biggest fees and whichever, but I think actually what's most important for them is that their client gets the best experience so that they use them again, because ultimately, you know, that's their business. And I think for us here, that I hope that everybody that we deal with really does feel that difference, where we really, it is a relationship piece. We do want to work with you going forward, and as I've said, obviously Glenhawk is at this point of growth as well. So, and what we're actually going to be doing over the next coming months, where we work on these new product sets, is we'll be getting involved with, you know, our brokers will be heavily involved in that. We'll be asking them, what is it you want to see from Glenhawk? What products don't you have in the market, or what do you have and they don't work well? Why don't they work? And we can work together to put those, I suppose, put those pieces of the puzzle together to give the intermediaries or the brokers what it is that they're looking for. And I think, as you know, everybody says it, so people get bored of hearing the same thing, but the flexibility and the speed, we really do have that here. You know, you've got access to all of the key decision makers. Anybody can pick up the phone to Guy and have a chat with him, and he'd be more than happy to have that conversation. He loves it. So I think that's something that's very different to what you're going to get with the other lenders in the market. So yeah, just give us a go.
Here. That's it for this week, everyone. Thank you, Samantha, for being such a fantastic guest, and thank you for listening. If you want any further information on Glenhawk, please check out their website. Follow Samantha on LinkedIn, that's a must, for more news and updates. And you can also find that more on the Mortgage Broker Club website and via our social media channels. Please share and spread the word about the MLC Show for property professionals. If you're listening on Apple Podcasts, I'm going to be cheeky, as I always am, and ask for that 5-star review. If you're not going to rate 5-star, just email me. Don't put it on there. And remember to check out the products and services at themortgagebrokerclub.co.uk. But more importantly, stay well and please take care.